Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on April 12th. So it's been an interesting week where we finally had some headlines that's captured people's attention. First, it was the inflation report on Wednesday, I think it was. And then today, as I record this on Friday, there's Iran, Israel shenanigans going on or might go on today or this weekend, which is affecting things. Overall, I can't say much has changed. We're kind of still in this sort of stuck in the middle ping pong sort of environment where, things look ugly for a couple days. Maybe a stock, kind of breaks a little bit of support, but then support shows up. And then 2 days later, you're like, wow, things look pretty good. But then they're selling on strength. And it's not even all based on the news. Like the inflation report was worse than expected, but stocks found support. Now today they're selling off. So, you know me, when things are getting going, of course, you got to be prepared for something to change or the occasional shakeout. But, I'll be like, hey, we're probably going higher. Or if we really break down, I'll say, we need time to repair the damage here. Just hold some cash and be patient. But right now, it's really just one of those in the middle times where you have to have your plan in place. Tight stop on this, loose stop on that, partial profits on this over here. But at the same time, you want to have, your buy list ready, because if we get going from here, maybe the last 2 months of sort of stalling out tedious action has been the correction, or maybe we shake out here on this Israel thing and then get going. I mean, I'm just making up scenarios at this point. But if that's the case, there are a lot of stocks that have good either kind of add-on buy points that could emerge or, obviously fresh buying opportunities. So, you just want to, in my opinion, trim your sails a little bit, hold some cash, be selective, but also really just have that plan in place and then let the market tell us what to do. If we break down, we could raise some more cash. If we get going, obviously put money to work, okay? And Cabot Growth Investors Model Portfolio, that's really what we've been doing. We have same thing as last week, 27 or 28% cash. Maybe that becomes 15% if we get going, real quick. Maybe it becomes 35, 40 if we break down and we ditch our, couple of our worst performers type thing. But right now, I think it's just kind of, I like to stay in gear with the evidence. And right now, the evidence says there's not much, except for gold and commodities, not much stuff that's going up in the last few weeks, if not couple of months. So, trim your sails a little bit, hold some cash, and then just let the market tell us what to do from here, okay? Let's dive into the charts. As always, I'm using Market Surge, which is a program from Investors Business Daily. You can learn more at marketsurge.com. Get my pen out here. So this is the NASDAQ. And I mean, this is, one of my thoughts earlier this week was just, again, after you're watching things go up, down, and this and that, net for the last, it depends what you're looking at, but net for the last month or two, there's really just not much money been made. I mean, obviously there's been some stuff that's worked or it's gone up and then come back down. But, just on the NASDAQ, I mean, we're just kind of chopping around up and down without any real progress. I mean, maybe it's up 1% or 2% from early February type thing, but it's not doing that much, okay? But to this point, at the flip side of that, to this point, we've had interest rates thrown at the market. Inflation has been stickier than expected. The number of Fed rate cuts that the market has expected and priced in, I guess the futures or whatever, has gone from like 6 or whatever at the start of the year, whatever it was, to now it's like down to like 2. So this that now we have Israel and all this. We've had higher commodity price. We've had a few things thrown at the market here, and we've held up above the 50-day line. So that's pretty good, at least for the NASDAQ. Okay. And I would also just say for the NASDAQ, this is the relative performance this versus the S&P 500. So up means it's outperforming the S&P 500, down, underperforming. And, I wouldn't read tick by tick, but it has perked up here a little bit. And you see the same thing versus like defensive stocks like consumer staples. So we'll see how it goes. It's not the worst thing, but, so far I think the chop phase is there. More important to me is just our Cabot Tides is our intermediate term trend model. So they're still positive, but it's starting to get, for the first time since, the buy signal back here, which was early November, basically. We're starting to get, just got to watch it pretty closely. Here's the S&P 500, again, above the 50-day line, but kind of coming into it here. Let's see how that acts. And then you start to look at other things. So this is the New York Composite right to the 50-day line here. So kind of a key level. You look at the S&P 400 mid cap right to the 50-day line. Okay, pretty close as of this morning when I'm recording this. And then I'm just going to pull up the IWM, which is at, whoops, that's my fault. Here we go. Hit that down. IWM here is below the 50-day line. Sorry for that. So, when you look at those 5 indexes, we could be getting close to 3 or 4. This is, you never anticipate these things, but if they do dip, that would be kind of an intermediate term red light or at least yellow light and tell you that the intermediate term trend, which has been stalling out, is kind of flipping to more negative. Bigger picture, things are fine, but intermediate term, that's really been the question, especially when it comes to some of these growth stocks. The other thing is just, again, I'm just telling you what is happening, not like what's going to happen or what I think it means or whatever. But, you have oil. This is XOP, looks pretty good and should provide, by the way, hopefully some first thrust opportunities, meaning like you've had this persistent run and then you get a pullback here. We're starting to see it in some of the services. This is OIH. So it could provide some entry points here depending how the market plays out. But, you have XOP, which is oil producers. OIH is obviously oil services. Gold, that's on everybody's lips these days. Very, very strong. This is DBA. Now, this is just random, but this is actual commodities, agricultural commodities doing well. And then, you have interest rates again. Now, they're down today because we have basically the war fear. Iran, Israel is just going to turn into some hot mess over there. That becomes a bigger problem. But either way, just looking at the charts, this is the 10-year yield. And I mean, we have been above the 50-day line here for a while, for the most part. And of course, accelerated higher this week after the inflation numbers. So, that's kind of what's, quote, working, okay? When you look at some of the growthier, risk-on sort of stuff, I mean, you could say commodities are risk-on, but you know what I mean? Not cyclicals, but sort of growth. You have chip stocks. This has been kind of the leading sector, SMH. I personally think this is going to be a big, probably tell you the short to intermediate term tail. So far, it's okay. In fact, when you look at the weekly chart, again, you're kind of 5 weeks into this sort of flattish consolidation. Volume's been pretty low. And it's not wild, you know what I mean? It's up and down, but it's not like it's rallying 2 weeks in a row up 10%, then crashing 10% the next 2 weeks. It's just kind of in this tight range, okay? But we'll just have to see. It's kind of doing this while those commodities and stuff are doing this. We'll see how that plays out. IGV, these are just ETFs, This is software. This isn't like my favorite measure of. I'd rather just look at the individual stocks that I look at. But if you're looking for ETFs, it's just easier. This has been sort of stalling out, testing support, maybe breaking down here a little bit. We'll see what it is, but living below the 50-day line. And then, of course, I've always mentioned this is like the IBD 50 index, okay? It's actually easier to see on the weekly chart. Just kind of starting a couple months ago, you've been up and down, up and down, up and down, but not much progress. It's probably up 1% or something in the last 2 months, but, trying to hold the 50-day line. This is not updated intraday. The mutual fund index is better, but it's been kind of chopping around here for the last few weeks. Again, bigger picture, odds favor to me, trend going up, but we're starting to chop around here for 4 or 5 weeks. So it is what it is at this point. Like I said, maybe this, going back to the IBD 50, or let me do the SMH. Maybe this we're correcting in time and not price, which is actually very bullish. You're not going up, 40% and then pulling back 20 and really correcting hard. You're kind of going up 40 and just kind of consolidating there for a few weeks and sort of resetting, catching your breath through just time instead of coming down. That can be very bullish. But the only way to know that's the case is to actually see whatever you're talking about, in this case, the chip index, actually go up and break out, okay? So if we do this and then come down, it's going to look like more like an intermediate term top, okay? Let's see how it plays out. We're starting to get the news. We're starting to get worries, obviously geopolitics, interest rates, stuff like this. So to me, it's more about, yes, if you haven't trimmed your sails, maybe trim your sails. I wouldn't be super defensive. Hold your winners, but just have your plan in place and let the market tell you, what can go on, what's going to happen from here, and just, I know you don't want to react when everything's down, but, if you already have some cash, selling an extra 1 or 2 things, if things crack, it's not like you're selling or buying wholesale on every single tick of the market, okay? Now, in terms of individual stocks, like I said, there's a lot. The good news, if you want to be optimistic, there's a lot of stocks that have, I wouldn't say October, November type of buy points where it's we've consolidated and bottomed out for a year and we get going. That was really, that was nice, right? and led to a huge run. But still, these are some pretty solid entry points. So I mean, these are like real leaders. This is Eli Lilly. And now on the daily chart, it's sloppy, but you're just sitting here for 2 months, barely, you can't even kind of see it. You're like, Mike, blow up that chart. I can't see it. That's the whole point. It's really not doing much. It's just kind of in this not even 10% range here, 50-day line. Okay, now maybe this thing shakes out, then gets going. Maybe it dies. I don't know. But right now, it's just one of these things where if the market turned tail and this really took off, yeah, I mean, it looks pretty high odds. NVO, of course, is the sister, not quite as strong, sister stock, I should say, in terms of the weight loss. But again, you get up here, it's, kind of an entry point. I'm seeing a lot of these sort of 50-day, or I call them pullback resumption PBRs, where they pull back and maybe you buy them on the pullback, maybe you don't, but it's really more when they resume and it's like, okay, the pullback's over, that sort of thing. So those are those. I mean, TOST, this hasn't been a leader, and payment stocks have been, unusually tedious, even though financial stocks have been good. But you can just see this TOST. I mean, just a very big, there's still kind of this bottoming area. Had a big run, from the lows. Not like it's been sitting around, but near the lows. And now you got 1, 2, 3, 4, 5 weeks here above the 50-day line, kind of chopping around. Again, can it break out? Can the market confirm? Chip stocks, I mentioned. So ASML, 50-day line right here. This is the one, I've mentioned this a million times, where, this was the biggest volume in 10 years, I forget. But some huge breakout of this kind of consolidation, which of course was part of this huge consolidation, ran up for 6-7 weeks, and now it's kind of consolidating under the 1,000 level. Maybe these things do need to correct and consolidate. My guess is ASML isn't done fundamentally or technically, you know what I mean? But again, if this thing can really ramp up, it looks pretty good. CAVA, this was kind of interesting. Now this is smaller and moves around a bunch, but nosedives from 72 to, I don't know, whatever, 60, 59, right to the 50-day line, and then recoups, basically half the decline in just 2 days. Doesn't guarantee anything. If this thing really caves in, then again, intermediate term correction. But just looking at the weekly chart, it looks like it's had a huge run, a lot of buying volume here, and basically had a 1 week dip, 1.5 week dip, obviously, to the 10-week line, and is finding support. Okay, just stuff like that. And same in the restaurant. Same thing in the restaurants. This is Wingstop. The breakout here, again, what you're dealing with these, they've had huge runs in the intermediate term, so they might need more of a rest. But so far, even these weeks like here are kind of technically support weeks on the weekly chart. And you have a 6-week structure, 6-week consolidation in Wingstop up here. A little sloppy, but above the 50-day line, so on and so forth. So those are like 50-day lines. In terms of commodities, I mentioned when we were looking at like OIH, some first thrusts, so like Weatherford, WFRD, breakout to new highs here above the century mark. Pretty solid run to 125 or whatever it was, and now it's pulling back. Could easily pull back further, but looks pretty good. And just keep an eye on these. These aren't great entry points. This is Freeport McMoran, copper, and some gold. But again, just kind of this long, endless consolidation. And now it's kind of changed character here clearly with a bunch of weeks up in a row, moving to new highs. At some point, does it stretch higher and then pull back or whatever? But the first shakeout, assuming it doesn't just completely melt down day after day after day after day, odds favor, not as strongly with growth stocks, but commodities can be tricky, but odds favor that first pullback can be buyable. Instacart, CART, well, this is actually called Maple Bear, but kind of same thing as like, do we get sort of a pullback in some of this nice run volume characteristics here, and then do we kind of get that first pullback to the 50-day line, okay? And then just a couple other names. I wanted to mention, this is IBIT, which is the new ETF for Bitcoin. I'm not a crypto expert, don't ask me. I don't know the details about halving and all that stuff that's coming. But what I do know is that, if you look at this one or some others, it had this big run. And given the uncertainties, it's been holding up pretty well. Yes, a big shakeout, but again, north of the 50-day line. So, you wonder, Bitcoin is kind of to me, it's kind of a tertiary risk on, risk off sort of metric. That looks pretty good if that's your deal. AXON Enterprises, I keep mentioning, this actually poked to new highs yesterday on good volume. Of course, the breakout isn't really sticking in weak environments, or iffy environments tend to sell strength, but still overall pretty tight pattern in there. And then just a couple more. Duolingo is a name that it's tough. This one is a tough stock to own. I mean, 20% corrections are just normal, or 30% corrections. But it did have this, it keeps having these big volume clues, and it did have one on earnings. And since then, it has been very, very choppy. You can see on the daily chart, 240 to 200. I mean, again, another 20%, 15, 20%. But it's kind of holding up here despite the market. So, I mean, this is one of these areas where if the stock could kind of consolidate further and the market maybe weakens a little bit, maybe there's some relative strength there. So Duolingo. And just Fresh Pet, it's coming down here, but again, FRPT, it looks pretty good. It's not sort of a go-go stock, and it had this big tight area gapped on earnings. And yes, it sat around with the market the last few weeks, but it's kind of pulling in here toward the 50-day line. So far, there hasn't been any big warning signs. Honestly, I could go on. I mean, there's a lot of chip stocks, tech stocks that are, it's not like they would be buys tomorrow or, Monday, I guess, or whatever, but they're right there. They're pretty close. So it's really just a matter of what the market does. I think right now, though, I don't want to say the onus is on the bulls, but it's just kind of, we're in this sort of stuck in the middle ping pong phase. So just have your plan ready. I mean, I know it's not as sexy as saying this stock's going up 50%. But I think it's just a matter of the market. This is where we are in the market cycle right now. Let's see what happens. If the buyers show up, I do think there will be a lot of things to sink your teeth into if you're ready. But we have to see whether the market's ready or whether it does need to digest, correct, and raise the fear level a little bit more. Okay, that's all the time I have for today. As always, thanks for listening and watching, and come by again next week for another Cabot Weekly Review.